Here in this video, we will be going over this article. It's from Finbold. It says Wall Street sets AMC stock price for the next 12 months. Now, beyond that, we are also going to get into what could be coming this week for AMC stock. I think this is a very important video, and also more or less what's going to be coming in the second half of 2024 that is on the exciting side. So let's get into this video. Hit that like button and subscribe to the channel. Let me know what you think about this information down below in the comment section. Now, when I say a little bit more on the exciting side, I mean like very exciting, like MOAS, like exciting for the second half of this year. But more on that later. It says Wall Street sets AMC stock price for the next 12 months. The stock price of AMC has encountered a challenging beginning to the year, plummeting by over 33% year to date. Concerns about its future among certain investors have prompted speculation about the survival of the movie chain in the current year. This year, the movie industry will produce movies that probably won't match the fame that the cinema products had in 2023, with some big blockbusters, which adds to the growing fears of investors. At the beginning, or at the close of trading on January 25th, AMC stock stood at $4.08 per share, reflecting a negative 1.21% loss from the previous closing and 9.33% decrease over the last 5 trading sessions. So it has been, oh my gosh, a rough start to 2024, that is for sure. It says trouble on the horizon for AMC. Initially popularized during the meme stock frenzy, AMC Entertainment has become a disliked company with an almost 10% short interest. The frequent dilutions primarily responsible for the sentiment have irked numerous investors. The company's latest update revealed a strategic move to exchange equity debt to address its considerable financial liabilities, signaling a challenging financial situation. The company currently carries a debt load exceeding $4.75 billion and an accumulated deficit surpassing $7.8 billion. Recently, AMC's CEO Adam Aron shared his thoughts on the stock's performance on X social media, saying, "So painful, 4 years after COVID, the industry-wide box office is still ludicrously anemic, and AMC stock has slid to $4.48. Difficult to think about anything other than guiding AMC back in these challenging times." That was $4.48, buddy. You're now at $4.10 per share at the time of recording this video. So it has gotten even much worse since when Adam Aron said this just a couple of days ago. And then Wall Street's target is $8.35 by the end of this year, with the lowest price target being $5 per share and the highest being $12 per share. So all in all, net, you are looking at a large potential gain from here. All things considered, I think AMC stock is trading at very much fundamental like valuations. The stock currently has a market cap of $807 million. This potentially even sets you up for a buyout, albeit you don't want to see a buyout if you are someone that is in the MOAS camp, right? A buyout ends the chance of a potential short squeeze at all. But it does seem more likely now than possibly in the past that AMC could actually see a buyout, that someone like an Amazon or an Apple or Netflix would be a good one for that matter, would look to purchase something like an AMC, especially with all of this cash out there, stocks sitting at dumpster fire type levels. A buyout here, honestly, could make quite a bit of sense. If like Netflix could go in and buy AMC for $6 billion, right? Maybe that would make some sense. Maybe that would be a good move on Netflix part. Not as much on AMC investors part, but still something to definitely be watching for, be on the lookout for, because if that were to happen, that would be bad news. It would basically cap AMC stock. AMC would not be able to go higher than the buyout price, which would be ultimately unfortunate. Now, in the week ahead, we do have some problems. Now, I'll give you guys the short version of this. Essentially, you have markets at all-time highs. You have massive volatility that you have not seen in a very long time that is about to come into our markets. Volatility as in big data this week, as in the Fed this week, and as in big earnings. Now, This week is a very interesting one because we just recently seen, as I reported in one of the last videos, you have seen the Fed end the Bank Term Funding Program. Now, this is a program that has $161 billion as of the last record of essentially loans out to banks that may be, upside down on some of their treasuries. Now, the official end date to this program, the Bank Term Funding Program, essentially used to bail out banks, is going to be on March 11th. Now, March 11th is an interesting date because that is right before the next Fed meeting, which is going to be on March 20th. So that's pretty interesting. But given the Fed has already made this announcement, they're likely to give us a lot more clarity as to why that is coming this upcoming Wednesday, January 31st, when the Fed does meet. That will be at 2:30 p.m. when the Fed will speak. The report itself will come out at 2 p.m. Now, markets might take this really good or really bad because currently the Fed is reducing their balance sheet about $90 billion a month. $30 billion a month in mortgage-backed securities, $60 billion a month in treasuries. One of the reasons why treasuries have went, 5% on the 10-year at one point is because the Fed is, let's be honest, oversaturating the markets with these treasuries. Banks cannot buy the $60+ billion of treasuries that are actually rolling off the Fed's balance sheet. They just don't have that kind of excess cash. They're running out of money. And you can see that in one of these charts, the overnight reverse repurchase agreement. This is where banks park their excess capital. It's a pretty good gauge of excess capital out there that could go into buying things like treasuries, because when banks get money, they can do two things. They can give out loans, they can buy treasuries. That's why a lot of banks are in bad positions right now, because they were flooded with all this extra money and some banks bought long duration bonds. Typically, that's not a terrible move if you're in a normal market, right, to buy long duration bonds. Other banks like JP Morgan, they saw the writing on the wall and they said, yeah, we are not buying long duration treasuries, because if the Fed continues to raise rates, those 10-year treasuries are going to get destroyed here in the short term. And yeah, that's just not something we want to be a part of. Now, what's happened as a process of this, you have drained the markets of liquidity. That's one reason why you could attribute AMC stock is down to $4 per share. That's why SoFi is down to $7 per share. That is why Fubo is down to $2 and some change. That is why Crocs is down to $98, right? You get the idea. A lot of stocks have been drained of liquidity. If the Fed does announce this Wednesday they are done essentially quantitative tightening, that could be a big boost near term to our markets, or the markets might say, why? Why is that? Is there more problems on the near-term horizon? Why are you reducing your balance sheet runoff, or just ultimately ending the balance sheet runoff? Markets may or may not love that, or ultimately hate that. Good news is it looks like the economy is holding up. Bad news is that looks like the Fed's not going to be in a super big rush to start cutting rates. Good news is March 20th, this week, we're not expecting the Fed to make any change, but to more so give us guidance on what to expect next. Good news is markets are no longer pricing in the first rate cut coming in March. So if we don't get the first rate cut in March, announced at this upcoming Fed meeting, if the Fed's like, yeah, we're probably not going to cut rates until closer to the second half of 2024, then we're already kind of preconditioned for that. So I don't think that's going to be, super negative. Really, it just depends on, what kind of language the Fed uses. The markets pick apart the language and what it means coming at 2 p.m., and then we'll get a bigger move coming 2:30 p.m. on Wednesday. Nonetheless, I think we are set up in a position for potentially disappointment, because if you look at the entirety of 2024, there's 34% odds that we get 6 rate cuts, 33.2% odds we get 5 rate cuts. So at the bare minimum, you probably see this flip to 5. If not, you start to see the probabilities for 4 rate cuts start to increase as well. And that's probably what the Fed wants in the near term. That's going to be bad news when a lot of stocks are trading as if, the economy is going to do great, as if the Fed's going to lower rates a bunch, maybe start rolling off their balance sheet. Earnings are going to come in better than expected. That's how the markets are trading right now. I'm here to say next week, you could get a disappointment on one of those fronts. It could be the Fed, or it could be the earnings. Now, Monday is going to be all about small mid-cap stocks. You're going to have SoFi. I think SoFi could have a sympathy reaction to the broader small and mid-cap kind of ecosystem. Supermicro directly will have a massive impact to small and mid-cap stocks. Supermicro is the largest stock in the Russell 2000. Supermicro is up in just the last month about 67% or so just since the start of 2024. So we've already gotten Supermicro's basically earnings that came out last Friday, and that's why the stock was up 35%. But there could always be surprises there. And I think even considering, the 35% move prior to earnings, you've priced in all the good news from earnings. Question is, do we get bad news? Do we get good guidance? What's the reason they actually came out and pre-announced earnings? And, what could that ultimately mean for the stock? That, again, will affect small and mid-cap names the most, which is AMC's ballpark. Now, Tuesday, you're going to get Microsoft, AMD, Alphabet, Starbucks, Pfizer, GM, UPS, JetBlue. Feel free to screenshot this and, use this for yourselves because, this breaks down when all the earnings will be. And there's going to be a lot of them, tons of earnings, but your big players, right? Like SoFi, small and mid-cap stocks, Supermicro for semiconductors. Supermicro will affect NVIDIA, will affect AMD more directly. They do a lot of hand-in-hand business together, Supermicro and AMD. And then obviously AMD, Google, Microsoft, those guys are going to massively affect the markets coming on Tuesday. On Wednesday, it's going to be a little bit of a slower day as far as earnings are concerned. Boeing, Novo Nordisk, Philips 66, Roper Technologies, MasterCard, Thermo Fisher Scientific, Boston Scientific. You get the idea. Smaller names here, not as systematically important for the broader markets. Qualcomm and after hours Wednesday, a little bit more on the important side, but again, not really systematic overall. And then obviously Wednesday, you're going to have the Fed, so no breaks there. The Fed's going to be super important. Thursday pre-market, Altria, Royal Caribbean, Peloton, Merck, SiriusXM, Cardinal Health, Honeywell, Tractor Supply Co., Stanley, Black & Decker. And then Thursday after hours, your big dog, Apple, will be reporting earnings, as well as Amazon and Meta. So 3 very important companies. Friday is going to be your kind of, what's going on. Let's filter through all of this information. For earnings, you have ExxonMobil, Chevron, Bristol Myers, AbbVie, Cigna, Regeneron, Charter, CBOE, AON, and Grainger that does report earnings. Now, Friday is going to be important for its own reason, because if you thought that was enough for 1 week, well, you're wrong. You have some big data coming out next week as well. Monday, you're really not going to have much. Some bond auctions here or there. Dallas Fed Manufacturing expected to plummet to negative 23 from negative 9.3 last month. Could be due to some of the cold weather. So a lot of banks and funds are really waiting for the ISM data that we will get this week as well. But Tuesday, JOLTS job openings. You're expecting to see about 50,000 less jobs, down to 8.69 million. A plummeting in job openings, bad news. Little bit of a fall, that's okay. But if job openings just stay where they are, I think that would be just fine as well. Now, we will get coming Wednesday. Let's see what we have here. Let's see. I believe we should get the ADP. That could be on. ADP employment change is expected to show 130,000 net job ads. This is the closest thing relatable to the non-farm payroll. So definitely want to be watching that one pretty carefully as well. Coming on Wednesday. And then on Wednesday, the Fed, that's going to be really the big story across the board. Thursday, you are going to get ISM manufacturing PMI for January, expecting that to come in a little bit better than last month. So that would be good news. That would really, say, hey, maybe it was weather or something else that threw off some of the regional manufacturing indexes. And then on Friday, your big data, non-farm payrolls and the unemployment rate will be coming out. Unemployment rate expected to rise to 3.8%. Non-farm payrolls expected to come in a little bit lighter than last month's massive 216,000 job gain. What we've seen over the past 12 months, though, is every single month you've gotten revised lower. That typically only happens when you are heading into a slowdown in the economy. So I'm expecting 216,000 jobs could turn into around 170,000 jobs or so, and we'll see 178,000 jobs that could come in lighter, and then the expected revision would take it down even more. But investors are really starting to pick apart the actual job numbers themselves. Like, where are the jobs at? Are they in government jobs? Are they healthcare jobs? Where are the jobs coming from? Because a lot of sectors of the job market have not been doing good for a while. And then you will get Michigan consumer sentiment final numbers for January as well, coming out at 10 o'clock in the morning on Friday. So overall, like, Monday's your kind of slow day. But if you're an investor at AMC, Monday is one of the larger days as well, because SoFi and Supermicro will affect the Russell 2000, which will have a huge sympathy effect on stocks like AMC. So honestly, I can't think of a more crazy week than what we are setting ourselves up for now, and might as well go ahead and do it, to start off the new year when the S&P's at new all-time highs and AMC stock is down big time for the start of 2024. So let me know what you think about this information. I think on a really bad week coming next week, AMC stock could likely fall to about $3.50 per share. That would be a fall of precisely 14.37%. On a good week next week, AMC stock could likely break out much higher than that to about $5.20 per share. That would be about a 28% gain from here. And why I think the upside could be more than the downside is because AMC stock has already fallen so much. You've already likely priced in a lot of bad news. But coming by Friday, I expect AMC stock is going to make a big move coming by the end of the week. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.